Good morning, everyone, and today is another trading journal entry. It is March 27th, and we're going to go over our same charts and take a look at how the market is doing and give you a little bit of update on trades that I've placed and trades that I'm thinking about doing as well. So to start, March 25th, the last trading day of the week. Last week, I took off some trades on the Qs because price was approaching resistance levels, short-term resistance levels, and I had met my 1x, 1 times risk objective. So the amount of dollars that I was risking, I made 1 times that. So that plus the resistance heading into the weekend, I wanted to take those trades off because one philosophy that I am trying to implement and enhance is that when we're buying and selling stock, the objective is to make money, right? And the hardest part also when it comes to trading in stocks, I find, is knowing when to sell. So if we have certain parameters that tell us when to buy and when to sell, I think we can be more professional and more sort of business orientated when it comes to trading. The reason I say that is because too often I think it's really easy and for a lot of people involved in the stock market to get to fall in love with the profits that they have and then the profits that they might have. I think the FOMO piece and just sort of sensationalizing, daydreaming about all the more money you could make by either investing more, getting more aggressive, or just keeping your trade on. Look at things differently this year, a more securing profits mindset. You know, I've had a lot of trades. I'm sure a lot of you have had trades where you've made money and you just never took profits only to see the stock then come back down. So anyways, let's see if we have some time to go over that, but let's dive right in. Okay, so the first chart we're taking a look at is our Dow Jones December low prognostic tool. So this was the low, which was breached this month in March. But now we've seen a rally back. And so far, the Dow is holding up quite nicely today. I think if we go to this chart list here, you can see right in this center of my screen that the Dow is actually doing pretty well compared to the S&P and the NASDAQ. In fact, the NASDAQ is down and out. I wonder if it's going to make its way back and rally today, later today, because all other parts of the market are doing well except for the more riskier names. So here's the Dow. It's holding up. Okay, well, excuse that honk there. I work in a industrial sort of business park, and apologize for the noise there. Oh man, it's still going on. This is terrible. I need my own space. That's why I need so many more subscribers, guys. If I could have more subscribers, I could have my own place. Otherwise, we got to keep up with this. Okay, so now that honking sound has stopped and I'm back recording. Sorry about that. It's terrible, man. It's going to make for bad videos, but what can you do? Okay, where were we? Dow prognostic tool. So after crossing that low, prices are starting to climb back up, and we've seen the oscillators, although it's a weekly view. I would argue that we could have potential upside here. I think with the banking crisis kind of settling down, and now the FDIC getting what it wants, with these distressed banks being bought by larger, well-run companies, I think it's brought some calm back into the market. So really, was it even a crisis? Was it a mini crisis? Like, what do we want to define it as? What we do know is that more money was put into a troubled system, and I guess you can say that's a good thing, right? Okay, next chart. This is a chart of again, the Dow Jones monthly chart with the 20-month moving average, and we're seeing prices still below. Obviously, we haven't made any substantial progress on it, but I want to continue to watch that. This candle here is looking interesting to me. I think this is like the bears tried to go low, bring the market lower, but the bulls are kind of back in and saving it. It's one of those spindles, I call it that. And I see it in other parts of the market where it's been, before a bullish move. And I'm not going to be shy and say that I have a bull hat on. I'm always looking at charts that are showing us strength to the upside. Okay, next one. Qs. This is basically the security that I am trading in and out of. It's full of tech, and based on my experiences, this tends to lead the broader, slower, bigger companies like the Dow and the S&P. Yeah, basically took some trades off because we were coming out to this resistance level, and I had met the 1x profit target in one of my accounts. So I said, hey, why not just take some money off the table, look for opportunities. And today I am looking to get back in. Well, maybe not just today. I might, I'm going to continue to watch the deterioration of this. I would totally be okay with getting into the market over 312 if we break above this level. Okay, here is this level. I think I can probably show it a lot better. You can see that this level is right around 13,000, and price is kind of rejecting here, kind of broke below here, rejected here, and it's kind of rejecting here. But I think it's holding itself because we're seeing all of the moving averages tick upwards. We're seeing some bullish strength over here. ADX is also positive. Those are all the bull things going for it. I'm not going to diminish the fact that this happened again prior to in the early part of 2023. Now we want to see whether this will continue, but we are starting to see momentum pick up. Maybe today's down day is time to accumulate. So we'll see how the market reacts later today. This is our weekly look. Again, this one is showing us that there is a lot of strength still in the market. Again, we want to hold at these levels. So I think the market is at an important juncture here, and it's this level. Okay, my long-term chart, here we are with the NASDAQ 100 monthly look with the 40-month moving average. We had the caution required circle fill up, and now we're seeing it in above. So that would tell us to have a long bias. Now I've only got 13% of the portfolio invested, so you could say I'm significantly on the sidelines. But being well aware of that, I know I need to increase exposure with a tighter stop. So while actually, as I'm on this topic of getting back in, so I'm actually going to get back in and make a tighter stop and risk less. So I have a greater chance of getting stopped out sooner, but if this momentum continues and I can get it at a good price, then it'll allow me to put more dollars on the market with less risk being exposed. So I'm going to try that out as well, and it's okay to lose money once in a while, as long as it is disciplined, because we know we're going to face those losses, but don't want to willingly always put capital in risk's way. Okay, here is the super famous, super ugly chart of mine that I've got it marked up in a million different places. I'll take our attention to the MACD histogram. We see this bottom formation that I keep pointing out, and some strength right now in the S&P. So I'll continue to monitor this. I'm expecting there to be bullish formation and get around the $4,000 level, because we're just not really moving past 3,900 decisively just yet. But once it does get out of here, I think we're good to go. rally mode. All right, this is our best 6 months. I think prices have the ability to rally right back up to 4,100 pretty easily. I'm going to say that, go out on a limb and say pretty easily. I think April will get us up to that level, and then we might have some more resistance. Yeah, I think we can totally get back up here, but it's going to be concerning. Might be that wall of worry. This is a weekly look at the S&P 500. The most bullish thing about this, the most strength that we see in this chart, is that price is above its 40-week moving average, and it's pretty near its 40-week moving average. So maybe we're getting price at somewhat of a discounted level. Volume is picked up in recent times here, and we'll see if this continues with the bullish breakout in the histogram. The VIX is something we've been watching. You can see here the VIX is below its moving average, and it's approaching 20. We know on this channel that we've been wanting the VIX to be basically below its moving average around 20, because that's bullish for stocks. And this is what we're seeing in the S&P 500 is some bullish formation. So again, I think putting more chips on the table from a risk reward point of view is getting better. This is the XVG. This is actually interesting. I don't know if a lot of people know this or know about this. I didn't for the longest time. This is an index that covers a huge swath of securities. I think it's something like 1,700 different securities. So it kind of gives you a broad look of what the overall market is doing, not just FANG, not those leaders. But you're seeing some consolidation here. We've had a waterfall decline and consolidation. Now, with all the seasonality strength that we've covered on this channel, I'm expecting an up move. But who knows, it could go down. But I think with this consolidation after a big down move, we're seeing some strength back in. And the MACD is kind of telling us that. So we want to see this tick upwards. Okay, rates or interest rates. This is the 10-year yield after a major washout, I think largely due to the banking issues that we had. Big pop up today. It's up 4% today. So it's not always a good sign for these securities and for the broader market. We'll continue to watch that. I wonder how big of a factor rates are going to play. Maybe they can go a lot higher. Maybe the market's going to get to a new benchmark with higher rates. I don't know. US dollar still in a large downtrend. Today is an up day. But if rates are going to pause and sort of more liquidity is coming back into the market, some easing of conditions, maybe the dollar will stop its movement up. Something else I just learned about is a stronger dollar pushes the domestic inflation outwards, because the purchasing power of the dollar increases, so you can actually start spending in another country, creating inflation over there. Pretty interesting, eh? This is the advanced decline line. So on a weekly basis, we've seen a tick up. It wasn't looking too good last week, but this is a constructive improvement. Here's a daily look. We're consolidating here in March. We're starting to see a breakout. So this is a good sign. New highs and lows. We did break down, but I think it's holding up. I think the market is starting to hold up and find its weight, especially as we head into April, the super strong month. This is volume. It was one of the more bearish looking ones, but this looks like a bit of a consolidation here. And might move to the upside. Here we've got the New York Stock Exchange and new highs, and that's also a bullish development here. Next, we've got the number of stocks above their 50-day moving average in the NASDAQ. That's crossed above, so that's really bullish as well. This is a chart that I marked up before to point out when we could see some bottoming in the market, and I think we're just coming to our first bottoming process. After watching all those charts, please hit the subscribe button.